Welcome students. So today we are going to start with the next chapter of financial management, which is investment decision. So this chapter is very important in terms of practical sums. Mainly two sums are asked from this chapter. So we will not do any kind of theory here. We will only focus on the practical aspect of this chapter. So for that we need to understand what is cash flow. So there are two types of cash flows, which is cash inflow and the other one is cash outflow. So there are these two types of cash flows. So cash inflow is also known as savings, which we are doing. It is a kind of income that we are generating from the investment. And the cash outflow is also called as our investment, the actual money that we are investing. So these two concepts I think is crystal clear to you. Now we are going to start with the first sum, which is illustration number 1, which says X Limited is considering purchase of a machine whose cost is 12,000. We don't need to do anything with the cost. We only focus on the saving or the investment part. We only need this kind of amounts only. So, assuming that the annual cash saving from using this machine is 5,600, that is before depreciation of 2,400 and tax rate is 50%, calculate cash inflow. So see, I already told you that cash inflow is our savings. So we will take the saving amount. So first we will write income and in bracket we will write annual cash savings. So this is a kind of savings that we have. So it is nothing but 5,600. I already told you that we don't have to do anything with the purchase consideration amount. We only need to have the savings or the investment which we have done. Then we will less the depreciation. One thing is to be clear here that first in inflows sums, the sums which are of cash inflows, in those sums we have to first deduct the depreciation and then we have to add it back. So first step which we will do is we will deduct the depreciation from here. So we will deduct 2400 from here and then we will actually get our net profit after depreciation. So that is nothing but net profit after depreciation. We will see what amount it is coming. So 5,600 minus 2,400, which is nothing but 3,200 rupees. Then we will less our tax, the rate which has been given to us. This is the tax rate, which is 50%. 50% of what? 50% of our net profit. We always conclude the tax, we always deduct the tax with the net profit. So keep in mind. So this is our tax rate. Then whatever we have left is our net profit after tax. Net profit after tax, which is nothing but 3,200 minus 1,600, which is 1,600. Then as I told you, after completion of everything we have to add the depreciation back. So we will add the depreciation because it is inflow. Wherever the word inflow comes, we have to deduct the depreciation at first and then secondly we have to add it back when the net profit is there. So we will add it back the depreciation which we have deducted earlier. So we will add the 2,400. Then what we get is cash inflows. Cash inflows is what? Our operating cash flows. It is also called as operating cash flows. How much it is? 1,600 plus 2,400. So 4,000 is the cash inflow that we have. I hope you got this sum. We will do the next passage of sums also in the next classes. Thank you so much.